Hello guys, it's David here. I'm just doing the London recap for this morning. I took one loss and I had one missed trade in AU, and then I pretty much just left EU alone because it was a mess in the middle of the range. But I'll cover both. There's some nice lessons from AU, so hopefully you'll take some value from it. You can see here EU and the daily, obviously pullback mitigated supply in the premium. Very likely the bullish chalk was only to mitigate supply. So I'd say it's very likely the week low is going to be run. We've been pausing in the demand that caused the bullish chalk for the last few days, so we may see a deeper pullback from here, or like you can see there's very little bullish momentum. We're pretty much just moving sideways, so it wouldn't surprise me if you just tanked without pulling back too deeply. So yeah, potentially look for buys or sells on the M15 depending on what sort of lines up, then sort of known not to really force it either way. On the 4 hour, obviously the 4 hour is actually bullish with this break of structure. Sorry, we get this break of structure, but then obviously we know that having mitigated the daily supply that we may have just switched bullish to do that, and then you can see we had a huge amount of momentum on a bearish 4 hour IBOS, which again is a pretty decent signal that we may switch bearish and we run this week low, because the daily obviously takes precedent over the 4 hour. Coming into session this morning, you can see in the 4 hour and daily demand, you can see we're just pretty much moving sideways. We printed almost perfect equal lows here, which price was always likely to smash. Coming into session this morning, my dream scenario was basically to sweep this high and mitigate that supply, as it lined up quite nicely with an M15 zone as well. So ideally I would have liked to have seen a liquidation into there and then look to smash this liquidity, but you can see we just sort of ranged around and then ultimately tanked early. So yeah, was happy 4 hour bullish in a decent demand, knew it was possible that we could get a continuation of the trend or at least a decent pullback in the supply, but at the same time no real huge bullish reaction as of yet. So I knew price didn't necessarily have to pull back that deeply. So yeah, on the M15 coming into session this morning, let's rewind it. This is 7 AM, so you can see we had this sort of range, bullish range, that was containing price. So you can see my absolute dream scenario, bearing in mind at the time this was a strong internal high and this was a weak internal low, and then obviously swing structure was bearish as well. My ideal scenario was basically for price to come in here and then look for an entry model to run that low, because obviously there's tons of inducement in front of it, so very nice POI. Obviously during the night price had just been chopping around, so look, I was perfectly happy to leave this. I've played on and see we'll get a bullish chalk there where the inside bar is taken, and it's from inside this range, so you could have looked for longs there, but like there's no engulfed candle. You know, the wick price closes inside the high of the previous candle, so there's no demand there for me. So again, I was happy enough to pretty much wait for here, or else if I was going to look for buys, basically wait for a bullish IBOS to sort of get more confirmation that the 4 hour pullback was likely to play out. But we've just played on, we mitigated this supply. Now again, no way I'm looking at that supply for potential entry in the M1. Didn't sweep liquidity, left sort of equal highs behind, no inducement. It's just a pretty low probability POI, definitely at one, especially it's in the middle of the internal range as well, pretty much bang on the EQ. Just draw that on to show you. So you can see it's literally bang on the EQ. So it's like, again, stick to the extremes whenever you're range bound. You know, you want to be trading up here or down here. So yeah, I was pretty much happy to leave it. Wait for more development, alert set here, and then basically wait for clear signs of intent either way otherwise. And then you can see we pretty much tanked from there. Failed to close below, which obviously is potentially a liquidity sweep, but then we did get the close below there, so this is our new strong swing high, and this was the most recent break structure. So yeah, coming up towards the end of session we had these buy to sell wicks. It's a flip zone because it reacted to that little inside bar there, so could have looked for an entry there, but again, complete straight push, no inducement, so it's very likely that will be used as inducement for the extreme, which obviously swept liquidity, mitigated this POI, so it's part of the supply chain. Would have much preferred it. I think we're seeing a bit of a decent reaction from it now. Yeah, you can see we're getting the reaction from it. Again, you can understand why it's pretty much the POI where the momentum come in to basically take this here. And yeah, but it remains to be seen. It wouldn't surprise me if basically we'd use these two sort of highs as inducement for the extreme. And yeah, that was pretty much it. On the M1 there was nothing for me really. Like, this was following the M15 chalk again. You've no real M15 POI to trade from, so I had no real interest in looking for buys at this point. You can see you got the chalk, bit of a liquidation, but sort of there, and then you could have looked under there, but again, I was just happy enough to leave it. And as I said, this M15 POI is definitely not an area I was looking to sell, and yeah, you can see we pretty much just tanked. And then you can see that was pretty much just all one push down. So yeah, I would have wanted to see an M15 chalk, sort of as this counter trend Evelyn. I would have wanted to see an M15 chalk before looking for any buys there. So yeah, that was EU pretty dead. It's like, look, the most important thing, I would say even more important than being able to bank winners, is being able to sit in your hands whenever market conditions aren't optimal. And when you have sort of bits of internal structure all over the place, like when you have three sort of types of, you know, like we have the larger internal, you know, we have the smaller internal. You could argue that is the smaller internal of this sort of smaller internal, and it's super messy. That to me is a message to sit in my hands and wait for further development, which obviously unmitigated extreme inducement or clear intentions either way. So that was sort of how I viewed EUs, pretty much just sitting on my hands waiting for more development. AU was a lot more interesting. So yeah, this is the week low. This is a strong high. We'd had this pullback, mitigated supply in the premium, so at this point it was very likely that the pullback was complete and we're going to put in the next bearish leg to the downside. So you can see we had this sort of we reacted to this sort of extreme demand, had a bit of a pushback, had a bullish chalk, but the bullish chalk was obviously only to mitigate this previous supply range before continuing lower. So sorry, I lost my train of thought here. Yeah, so obviously you had the mitigation and came down with a lot of momentum. We had a bit of a reaction to this demand here, which obviously caused the bullish shock, but then the reaction had failed, and then this was like a daily flip zone. So this morning I was sort of looking to see if price would just pull back in here and then tank basically and take the week low. So I had a massive conviction on this here, basically, that we'd mitigated the premium. We had mitigated supply in the premium, so the pullback was likely complete, and then you can see the supply ranges are being respected the whole way down. So at this point it was very unlikely the price is going to want to pull back that deeply, so I had a massive conviction that this was going to be run, and for this reason I wanted to be aggressive with buys, or sell, sorry, on the M15. And the 4 hour again was bearish too, or it was bullish at the time, sorry. This is the break of structure. We'd had the reaction to the extreme demand. Obviously we had a lot of momentum to the downside here. Then we had a bit of reaction failed, had the bearish IBOS. So this gave us like this little 4 hour supply range to trade from, which is obviously the same as the daily supply. All these here were sort of mitigated, quite messy wicks, and we had basically these sell to buy wicks here, which obviously price pulled back into, and then basically was looking for, again, Evelyn's bearish, high conviction this is going to be run. So again, plenty of reason to be aggressive with sells. Not ideal that we didn't close below the low, but it was likely just to pull back into supply. Like, it was very unlikely, given all this momentum, etc., that we were going to sweep this low and then continue bullish. Obviously it could have happened, but it's quite unlikely. The M15 then, this was my protected internal high, because this was sort of my IBOS. This was my swing high, this was my swing low. So coming into session, we had mitigated the supply at the extreme of the protected range that caused the most recent IBOS. Had a bearish chalk, swept liquidity there as well. Yeah, so at this point I was pretty much looking for price to pull back in here and then look for a buy. But I was also aware Evelyn's completely bearish. volume's likely to increase at Frankfurt Open, London Open, etc. So he's also where the price was less likely to pull back that deeply. So for that reason, it's in scenarios like this here where I will consider an M1 continuation. It's pretty much the only place where I will. So when everything's aligned and I have a massive conviction that basically things are going to run. So I'll just play this on. You can see. So yeah, my thesis played out perfectly. You can see took an M1 continuation in here, which I'll show you in a second. Then we had this sort of flip zone where we reacted to the range, swept liquidity, pushed down. So obviously you got the flip and you've got this range failing as well, and then I was basically looking for a sell within this supply to basically target that there. So yeah, everything was a line bearish, just wanted to be aggressive. So I'll go through the M1. It's pretty at one loss, which I'm not that happy. It makes it like it's a sort of scenario where it's worth taking a -1 on a lower probability trade, but then the problem was I missed sort of the next opportunity, which was better because I let fear get the better of me, to be honest. So this was the first loss. You can see here, obviously not ideal. We're trading into this M15 range. Trading into this M15 range, obviously far from ideal. But then just given how everything was so bearish overall, I knew it was like unlikely that this range was going to hold that deeply. So we had this sort of reaction to this pretty clear M1 demand. So that's your mitigation, or sorry, that's your flip. So when we sort of spike below that there, kind of that's the flip. We swept tons of liquidity here. Very nice liquidation. So that means it's less likely the price is going to want to go higher. And then we sort of mitigated this extreme wick, which also had a bit of inducement from it as well. So it met the criteria: mitigation, liquidation, flip. Again, because everyone's so bearish, I was just happy to be more aggressive. Yeah, obviously not ideally be trading against the M15 demand, but just, as I said, had a high conviction, wanted to be aggressive, so I played on, just got spiked out, and then ran on nicely. Probably looking at it, probably the main reason why it didn't play out is pretty straight push, no inducement. So that might be something that we need to, if that might be something that I need to add into the M1 entry model. And then you can see we push down. This obviously gave us our new M15 supply in the sell to buy wicks. There, swap liquidity as well, which is obviously very nice. So and this is where I hesitated. I marked out this flip zone, very clear POI. It's extreme unmitigated. Everything up here is mitigated. We reacted to this little range here. So yeah, all good. Another, if price hits there, it's another reason to be aggressive. So play it on. Right now, come into the POI. Now at this point, I was looking at it. We come in with a decent amount of momentum, which I didn't love. So for that reason, I was sort of thinking, right, I want to see sort of a pretty clear liquidation here, because there was nothing massively clear in the M15 either. It was a pretty straight push. So eventually, yeah, like you can argue that's your liquidation there. It's a minor high. Liquidation there. It's a minor high. I was sort of ideally looking for something like, sort of get like a fake chalk and then take that high and then sort of really catching somebody on the wrong side of the market, really. And so I was watching, I was just hesitating on this, got the chalk. So at this point, it's valid to enter here. And I should have entered here purely because of how the higher time frames were looking. It's like I had such a high conviction that the week low was going to be run the daily, that this is exactly the sort of scenario where you want to take this entry model. And equally, if you're taking this sort of entry model in the wrong areas, it's probably a large part of the reason why you have a bad strike rate. It's knowing when to be this aggressive, which is literally when everything's lined up and you're in a high probability M15 POI, you've got the refined M1 within it. This is where you want to be aggressive. So then you can see push down again. At this point, we had got this sort of took out that low chalk there. So at this point, I was basically waiting for this high to get swept and then to look for the entry model. But you can see we just and then absolutely tanked. Probably would have targeted the M15 low there, to be honest. So Yeah, just probably 10 or to the low, pretty much. So yeah, played out beautifully. So yeah, that's definitely a mistrade in my behalf. Obviously had the high conviction. Evelyn was lined up, wanted to be aggressive, but then took probably too aggressive here trading against the M15 demand, and then basically had the fear of taking the 2 losses. Basically wanted to see the clear liquidation and sort of probably more of a V shape. But this is a scenario where you want to take this entry model, but equally if you're taking that entry model in bad areas, you're going to get absolutely murdered, and that's probably the reason why you're taking a lot of losses in a row when your strike rate's bad. And like, yes, everyone can be profitable with a bad strike rate as long as your risk to reward is on point, but if you want to trade larger capital, you want to trade for a prop firm, it's like you want to ask yourself, how do you want to do it? It's like, do you want a 50-60% strike rate, or do you want a lower strike rate and higher? Or now the way I look at it is, I've had people say to me, oh well, I have a poor strike rate but I only risk 0.25% per trade. Right, that's alright, but if you, right, so say you're more aggressive, you have the lower strike rate and you bank 30 or in a month, which is obviously an incredible return, but you're only risking 0.25%, you know. So that is, let me get the calculator out, 30 divided by, sorry, .25 multiplied by 30. So that's basically your 0.2, your percentage return is 7.5% there. Or you can have a higher strike rate, you can confidently risk 1%, and then if you bank 10 or in a month, with a lot less hassle, a lot less drawdown, a lot less emotions. And look, at the end of the day, we're in this, we're all in trading to make money, we're not in trading to bank percentage. And like, it might sound great to say, oh, I banked 40 or, and that's probably, that a part of that is probably your ego speaking, because you want to say, oh, I banked this much or, whereas at the end of the day, you're better off banking 10 or risking 1% than banking 30 or risking 0.25%. So yeah, everyone should aspire to the highest strike rate in my opinion. And then obviously this is like where the discretion comes in, knowing when to take an entry model like that. But as I said, Evelyn was bearish at that point, and I had a pretty high conviction that the daily low was going to be run, which obviously ultimately it was. So yeah, pretty annoyed that I hesitated in that. Not too annoyed about the 1% loss, to be honest, because you know, if that had played out, then I would have been in a great trade as well. But yeah, definitely should have been more aggressive here, and that was definitely me letting fear creep in and looking for perfection looking for perfection in the M1 in the form of the entry model, and losing sight of where we sort of were sitting on the higher time frames. But yeah, that's it. It's been an interesting couple of days in AU. Anyone that trades it will know it's the streakiest pair ever. It's like there'll be nothing for a month, and then basically for 2 or 3 days everything will hit. But again, it's all about just sort of understanding when everything's aligned, and knowing when to put the foot in the gas. So yeah, that's that, guys. If you have any questions on it, tag me on one of the public channels. Don't hopefully it took some value out of it. So have a good one, guys.